And with us now for more is Chief Equity Strategist of COL Financial, April D. Tan. So good to see you again. April, welcome back to the program.
Morning, Kathy. Thank you for having me.
Okay, so how are you gauging risk appetite so far? The index was on a march towards 6,600 when 20% tariffs came through, and then came the seesaw moves yesterday, the ups and downs on a Thursday, decidedly ending lower at the close of trade.
Yeah, I think risk appetite is coming back. But if you notice in the market, what's happening is there is a rotation. Certain sectors are not doing well, whereas others are doing better. It depends. Because I think right now, one of the major drivers really is expectations that interest rates would be going down more and faster in the second half, due to, of course, inflation in the Philippines being quite soft. And, I think the Fed, there are indications that the Fed may actually, be cutting rates sooner rather than later, and again, more aggressively. So I think those are the factors in play. So you would notice that more of those interest rate sensitive sectors are doing well right now. And that's helping. I mean, the market is quite cheap right now as well.
Well, where did the tariffs come into play? With tariffs at 20%, that's a lot higher than 17% at the onset in April.
Yeah, I think, I mean, if you look at the tariffs, I know it's bad. But then again, it's not really a big chunk of the GDP. In fact, if you look at listed companies, I don't think many listed companies would be affected by tariffs because we don't have a lot of exporters that are listed. Most of the companies that are listed in the PSE are focused on the domestic market. And again, I mean, if you look at all the other tariffs, 20% is still low, at the low end, compared to everybody else. It's just that right now you have, for example, Vietnam also being at 20, unlike before, it was so much higher. And the others, I think the gap has narrowed. You have some that are at 25. It's just less. But I don't know what the Trump administration is thinking. It seems like they want to get rid of the 10% tariff and just raise the minimum to 20%.
But even before 20 came through, you've already lowered your PSEI year-end target to 7,700. Are you sticking with that?
Yeah. Yeah, yes, we are. The reason why we reduced it to 7.7 is because we were noticing that, for example, we had a disappointing first quarter GDP growth. So before we came out with the 7.7 target, we were at 8.1, and we were thinking possibly we could see a surprise this year because of the Create More law. Remember, when the Create More law was passed, the government said they were anticipating 4 trillion pesos worth of investments, mostly in renewable energy. But it seems like, they're not panning out, maybe because of uncertainties brought about by the Trump administration, what will happen, or even companies like foreign companies right now encountering challenges locally because their economic outlook is weaker. So in some ways, that is also having some impact on our economic growth, which is why we're thinking, okay, maybe this is not the year for the PSEI to re-rate. So at the 7.776 level, we're just retesting the highs that we did last year. So, that also translates to an EPS growth of 7-8% for the PSEI. So we think that's a safer target. I don't think we'll see a re-rating this year.
Okay, so now you're recommending a buy on dips and sell on strength. So it's basically a stock picker's market from here on out. So which ones do we pick? Which ones do we let go of?
Yeah, so, well, we're saying since earlier on I talked about interest rates, expected to go down. And another theme is, of course, inflation continuing to go down. So we like consumer names. We also like interest rate sensitive names. For example, among the banks, we prefer the smaller banks. But that said, it's been quite fast. The foreign investors have been selling the big banks and they're starting to look cheap. That I'm tempted already to actually start picking them up, in the buy low, sell hype type of trading strategy. And then, of course, we like the REITs. Property names are also going up because they're quite interest rate sensitive. So, a lot of opportunities to buy. And even like those that will benefit from a strong peso weak dollar, like Cebu Pacific, that's benefiting from lower oil prices, and we have GT Cap as well.
All right, lots to choose from then. Stock Pickers Market, April Litan of COL Financial, thank you for your insights.